Hello and welcome back to You Want to Do What with Dan and Julie. Today we're talking all about insurance. Don't worry, it's not actually as boring as it sounds. Today we have Sam, who is an underwriter, and Phil, who is a broker. Now they both work in the oldest insurance market in the world, based in the city of London. Hi guys, want to introduce yourselves?
Hi guys, good to be here. I'm Sam and I'm an upstream energy underwriter in the city in London.
And I'm Phil. I'm a Specie broker in the City of London as well.
What is a specie broker, Phil?
Well, it's not what most people think, and we don't do zoo animals and different species like that. It's actually species derived from like ancient term meaning something of value. So really, we insure things of value. So anything that's shiny, precious metals, jewellery, fine art, cash, anything that has an intrinsic value, really.
What is upstream energy, Sam?
Okay, upstream energy is, so the energy insurance market is split into two basically. You have upstream and downstream. So upstream energy is the sort of the process of getting hydrocarbons out of the ground, and then downstream energy is the processing and refining part of the risk. So I do the upstream energy part.
So you're an underwriter. What does that actually mean? To most people, they only see underwriter maybe on their car insurance. You know, this has been underwritten by. What do you actually do?
So I basically take the risk of an insurance policy, and I charge a premium for it. And if the client has a claim, I will pay the claim. And if they don't have a claim, then fortunately the insurance underwriter then makes a profit. So that's how our company makes money.
And so how does that differ to a broker? What does a broker do?
Well, I guess I'm the front part of that. So the client will come to me, and I will take that risk to Samuel as the underwriter. So the client, the way that market works, you can't as an individual or as a company go direct to the underwriter to source your policy. And the reason for that is because it's a subscription type marketplace. So you go to a broker like me, who will then go out to the various underwriters in the London market to find the best deal. And the best deal is not always based purely on price. It might well be on the conditions that they're willing to offer as well. So my side is the business has to get to the underwriter, and that's where we come into play.
So a little bit of disclosure. For all my sins, I used to be in the same market as these two, but I left, unfortunately. Well, unfortunately, maybe, I don't know. But it's the oldest insurance market in the world, isn't it? It's something like over 300 years old. It started by this guy in a calf, and they used to insure basically boats going across the world, right? That's how it started.
Yeah, absolutely. It's so it was founded in 1686 by a chap called Edward Lloyd, and it was founded in his coffee house. And yeah, as you rightly point out, it was initially set up to insure sort of hull and sort of sea-going, ocean-going vessels that would go from one place to another. And that's how it started, and that's sort of one class of many businesses, specialty classes of business that are placed in and around the insurance market in London. So
what we talk about classes. So classes of business, like Phil, you work in Specie, which is completely different to what Sam does, which is upstream energy. But there's so many different classes in the insurance market. You can specialise in, well, you can go very, very niche, can't you? And then very, very wide, like hull and ships and classic cars and diamonds, jewellery. It's incredibly varied, isn't it?
Oh yeah, certainly. You get if you think that this marketplace caters for all the way down to personal lines, so an individual's typically, I'm not going to source my house insurance because I don't have enough things of value, but you get personal lines all the way through to more on like on Samuel's side, you've got multi-billion-dollar companies sourcing their insurance, and this is these deals are being done in one building in London. It's quite incredible, the span of business, and I might one day be out in the marketplace place an insurance policy for a few £1,000s, whereas, only a stone's throw away from me, an underwriter might well be doing a deal for £5 million, £5 million worth of premium. So it's such a varied place, and it's huge spans.
So when we say it's a subscription market, what that basically means is you have to go around and get your risk up to 100%. So you'd go to somebody like Sam, and you might get them to do like a 10% of that total sum that you're trying to insure. And then you've got to walk round, still to this day, people walk round a building with paper and say, hello, Mr. Underwriter. And then you have to broke. There's an art to a broke, isn't there? Do you want to talk about that?
Yeah, certainly. Yeah, I mean, you got to think really as the... go back to your first point, about the subscription market. You've got really, you might have a small risk where an underwriter will write 100% of it, but you've also got the larger risks, and I'm guessing on Sam's side there's not many underwriters that are writing 100% of the sort of risks they're doing, but in the specie market some of the smaller stuff is. But then you've got the larger risks where, and not necessarily larger in size, but also ones that are perhaps offer a greater level of risk. Where you need a subscription market, and you're going to multiple people, and they're each taking a small share of that risk. Now, as the broker, you're kind of like a glorified salesman, I suppose. And really, it's your job to sell that risk to the underwriter. Now, you've got an idea of which underwriter is best for a certain risk. Depending on what you've got, different underwriters have different appetite for different types of risk, even within a class. So, you might if I have a specie risk that's fine art, then I know which people to go to that are going to be, the best for that. And and again, like I said, not just the best from a pricing perspective. It's a balance. You've got to balance all the elements of what you're trying to achieve. So you want the best price you can, but also at the best terms and conditions you can get. So it's that's where the broker's knowledge comes in more than anything, in that making sure that they're doing the best they can for their client.
So how, as obviously in two different industries within insurance, how much of a knowledge of that industry do you need to know? Like species, how much do you know about art? Like, is that actually something that is required, or do you go to specialists?
Well, what do you need? Do you need to know about art? Not especially. I'm always very open with my clients. I say, you can put a painting in front of me. I couldn't tell you if it was worth £10 million or £10. What I know is how to place art insurance. We rely upon experts to tell us that information. So, generally the people that are insuring valuable art, they'll have had valuations, and we'll rely upon valuations from Sotheby's or Christie's, one of the big auction houses or whatever. So I'm not there to say, yes, that art is worth X amount. There's people to do that. So yeah, what I'm there to do is to ensure that in the best way possible.
So Phil's job is obviously to come in and sell you something, right? And now, as the underwriter, you've got to almost be on your guard a little bit, because essentially these guys are coming in to sell you something. How do you take what a broker says and be like, okay, that is... You obviously don't... No, brokers never lie. If you lie, you're screwed.
Brokers never lie.
But how do you determine, okay, this is a good risk, I'm going to take a punt on it, I'm going to write it?
So, yeah, it's a really good question. As an underwriter, your main role is to assess the risk effectively. And there's various ways you can do that. You can do your own research. You can request information from the client, to which you can then go through yourself, or you as well, you listen to the broker, because the broker is giving you, so the negotiation part of that is pretty important, because they're the ones that are closest to the client. So although we have contact with the clients, and usually once a year, hopefully we'll be able to meet with them to understand them a bit better. But but you are reliant upon the broker and what they're telling you, because at the end of the day, they should be they're getting paid for having a knowledge of that client in order for them to be able to sell the product to us. And then it's my job to sort of assess that, and there's various ways I'll do that. So I've got, for example, and we've got an in-house engineer that works for us that will assist me in going through the information, as well as sort of I have to be quite, not careful, but I have to be quite specific with the questions that I'm asking the broker in order to get specific answers, because there might be some brokers that will only tell you all of the good stuff, but not necessarily about the bad stuff.
So does the broker come to an underwriter within whatever company? Because are you not going against your own company then? Is it from...
No, so yeah, it's a good question. So it's the building where the insurance, where the negotiations take place is in one building, and yes, the broker does come to the underwriter. You sit down face to face and you discuss the risk. You discuss the underwriter's appetite for taking on that risk. Each company, so each individual company has a part, and they're known as boxes, which are sort of individual areas. So the building, for example, houses probably hundreds of different companies within one building, and then the brokers don't tend to base themselves in that building, but they'll have daily access to that building, and then they treat it as a marketplace. They'll walk around, as Dan points out, with their slipcase, which contains all the policy documentation and the supporting information for the risk, and we'll walk around and go from company to company, selling his client's policy effectively.
That was definitely the favourite part of working in that industry for me. The sort of the art of the broke. Not that I was ever any good at it, but I gave it a go. Still don't laugh. But yeah, that was part of the trying to convince the underwriter, not lie, tell them the truth, but also paint it in a good light. That was the most fun part of working in insurance for me, definitely. And there's so much history in the way you do it. There's sort of etiquette, and everyone still dresses up in suit and tie, and well, they just got rid of that tie rule, didn't they?
The tie rule is now gone, but yeah, you're right. That's what I think a lot of clients love as well, though, is that old fashioned process, and there's we still do today, which to many people is a very antiquated process, but Sam, he sits at his box waiting for brokers to bring along and sell their fares, and we'll queue up. If I want to go and see the underwriter, and there's 5 other people that also want to see him, we have to just form a queue and wait your turn. The trouble is, the guy in front of you might have an hour's worth of business to do, so you're going to just stand there wasting that time waiting. But the flip side of it, Friday, 4:00, something comes in urgent, that you can walk to and you can find someone, and you'll be able to, get that risk covered or get it extended, whatever it is you need to do. You haven't got the whole thing where, where we would get, if you're just always trading electronically, where you've got to send an email to ask someone to do that at 4:00 on a Friday, and they've already gone down the pub, and that's it. You're it's out of the question. So, whilst it's old fashioned, it kind of still works. And I think, this period, whilst we've been in our COVID lockdown, is perhaps been the first real test of can it work, outside of that. And, I'm sure, some practices will change, but I think, ultimately that we'll still get that same, face-to-face interaction. I think it's, it's been really, it's what it's been based on for years, and it's worked. So, does it need to change?
Mm-hmm. So, sort of to summarise what insurance is in what we're talking about today, the context is it's the old market, 300 years old. There's insurers and there's brokers, underwriters and brokers, and the broker's role is to walk around and basically place their risk, get 100% signed up, and do the broke. And it's quite a technical industry. That part is definitely really good fun and really interesting. But how did you actually get into it, Sam? So what was your sort of lead up into it? Did you go to uni? What did you study? How did you get into being an underwriter?
Okay, so I chose it primarily because I wanted to go into the financial sector. I wanted to be in London, and I was fortunate enough to get some work experience when I was still at school. I was 15, and I did some work experience and really enjoyed it. To your university question, yeah, absolutely. I did go to university, but I studied history, so it wasn't specific. At that time, I wasn't sure what I wanted to do, so I wanted to spend 3 years doing something that I enjoyed rather than something that might perhaps limit me going forward. Yeah, it was very much sort of work experience, and then even when I was doing A levels, I was then doing, because I'd enjoyed my previous stint when I was 15. I then sort of, when I was doing GCSEs and A levels, I was doing work experience, both on the broking side and on the underwriting side, just to get a feel for what part of insurance I wanted to do, if that was where I ended up. And although there's sort of no specific qualifications that you need for insurance, I mean, I did a history degree and I'm in the financial sector doing offshore energy. So it's a bit random from that respect, but there's no specific qualifications that you need for insurance. I do know of a few people that have done insurance degrees, and they're obviously very sort of driven and focused on wanting to do that from an early age. I wasn't like that. I didn't know what I wanted to do. There are insurance exams as well, which you can do, which are known as the CII, so the Chartered Insurance Institute exams, which you can do if you're not in the industry and you want to try and get into the industry. I think if you can demonstrate to an interviewer that you're perhaps thinking about going and doing those exams, or you're starting and working towards them, then that shows the interviewer that you're keen and sort of focused on that industry. So that's sort of one of the things that you might want to consider doing if you're thinking about going into the industry.
And was it a similar story for you, Phil?
No, not really. When I was at school, I wanted to join the police, and that's what I was going to decided. That's what I was going to do. My grandfather was like the local village policeman, so as soon as I was old enough, finished my A levels, I joined the police, and then I quickly discovered that I wasn't going to be a village bobby on my push bike riding around having like a cup of tea and cakes with old ladies. I was actually going to be getting beaten up and the like. So I quickly realised that a career change was a requirement. And one of my friends worked for a company that did a kind of outsourced insurance services, and he was like, "Oh, we're recruiting, and you don't need to know anything about insurance. So, do you want to come along?" And I did, because my dad was giving me a load of grief about I just resigned from the police and I needed a job. So I went along, and I did it, joined it, and it wasn't in the city or anything. It was locally. Like I said, it was like an outsourced sort of back office type role. And I was fortunate. I worked there for about a year. And then one of the broking houses that I communicated with in London as part of that job offered me a position. And it's actually still the same company I work for today. But yeah, they've been purchased by someone else now. But yeah, I've been at that same company for 16 years now.
Wow. That's actually, both the ways you guys have got into it is really common in the marketplace, isn't it? People kind of tend to fall into the market and into insurance. Like, nobody really wakes up and goes, I want to go into insurance.
No, I think, yeah, you're absolutely right. And one of the things that Phil and I probably face a lot from our friends that aren't in insurance is they think we sit in a call centre with a headset on doing house insurance or car insurance or something like that. And it's sort of, it's not like that. But when you're sort of at school, you don't really know what the insurance London market is like. And it's only if you're fortunate to sort of stumble across it, in which case, or in my case, sort of through 2 weeks work experience. And yeah, Phil starting off in the police, and ending up in insurance is it's not a dissimilar story.
While it is obviously fairly office based, it's not. You're obviously up, going, it's finding different, and it's also very like bubbly, I suppose, isn't it? It's, you've got lots of people you need to interact with. You obviously have to be a salesman as well as a buyer, and what sort of personality traits do you think really suit both a broker and an underwriter?
I think from a broker's perspective, you've got to be fairly confident. You are trying to sell something at the end of the day. For me, I think one of the attention to detail is very important.
That's why I left.
It's I don't like any I wouldn't do it myself. I don't encourage any of my team to leave the office until they know everything about a risk that they're going to need to know, because you don't want to be sat in front of the underwriter and not knowing the answer to a question that he asks you, because not only are you wasting his time, you're wasting your own time, your client's time, and as Sam said earlier, at the end of the day, you're getting paid for doing that good job for that client. So that attention to detail and taking the time to understand what it is you're doing and you're selling and what your client is requiring is really key. You need to be confident, really, and you need to be, I guess, a bit outgoing. There's a very sociable side to the insurance market. There is interaction with clients, so you need to be willing to go out and do that.
You bring up a really good point about the sort of social side, because essentially the market is still built on relationships, isn't it? There are more analytics coming into what you guys do, but it's still built on, okay, I feel comfortable going to see Sam, the underwriter, because we have a good relationship. He knows I tell him, the facts about the risk, opposed to, misleading maybe. And that if Phil came in and said, I've got this risk, I need your help on it, I need the last 5% or something, you trust him. Yeah. And that's built through both social and both broking and continuously building relationships.
Yeah, absolutely. I think Phil's spot on in terms of the brokers that I tend to come across. They're all confident and sociable, very good at networking, which is key for a broker, because they have to, when presented with a client that has a risk, in the broker's mind, I guess, they have to think of all of the potential underwriters that they want to go and see. And if they only know 2 or 3 underwriters particularly well, then it's going to make their job a bit harder. If they know lots of underwriters very well, then it probably increases your chances of getting that risk placed. I think that sort of the personality traits from an underwriting perspective are probably slightly different, in that you have to be analytical, a bit of a risk taker as well. You're effectively insuring a risk, and you have to run the risk that risk might have a claim. There's an element of risk taking to it. Confidence, absolutely the same for underwriters as well as broking. From an underwriting perspective, you have to have confidence to be able to insure what you're insuring, and being personable as well. So that's key from an underwriter's perspective, because you want as many brokers as possible to come and show you all of their business. That's how effectively we make money. We want to write lots of policies that we like, from clients that we like. So the more brokers that you know and the better your relationship with those brokers, the more business you're probably going to be shown, therefore the more money that you can potentially make.
I think as well you get, the more, you're more likely then as well to see all of the broker's business, rather than just like, oh, we're struggling on this one, we'll go and see Sam, like hopefully he'll finish us off. Like Sam wants to be seeing all of my business, so he sees the good stuff, not just the stuff I need a hand with.
There's definitely, as being a broker, there's definitely those markets that you would not go and see, and then right at the end, if you had a tough risk, you're like, oh, you all right? I haven't seen you for a couple of months. Yeah, sorry, been really busy. And then they're looking at you like, yeah, all right, mate, come on, what is it? So going back to your average sort of days. Now, brokers and underwriters' days are sort of similar, but what is your average day like, Sam? You know, how early you in, when do you leave, what you doing in a day?
How early am I in? Blimey. So I must admit, I'm an early bird. So I'm in the office at 7:30 in the morning, and I'll spend those few hours up until say 11 o'clock assessing the various policies that I've seen the previous day, previous week. Not all of the risks that I underwrite, I'll underwrite there and then with the broker sat in front of me. A lot of the time, on the risks that I insure, given the sort of high values that are involved, you have to take the risk away and you have to sort of digest it. And I then sort of lean on my sort of in-house petroleum engineer for advice and things. So I'll sort of spend my day, or the first part of my day, assessing the various risks that I've got, and then the underwriting hours tend to be from 11 in the morning until 1 o'clock. So at 11 I'll make my way over, I'll sit on the box and effectively wait for brokers to come in and see me, and hope that they either show me new business, or it might be a renewal of a policy that I've underwritten previously, or there'll be an endorsement to the policy, which is a sort of a mid-year change to the policy. Then there's underwriting hours again in the afternoon from 2:30 until 4:30, and then I go back to the office, and then I'm doing the same again, sort of assessing those risks I've just seen.
When we're talking about this sort of the art of being an underwriter, there's another sort of side to it, isn't there, where a broker brings in a risk they're trying to win off of another broker. So as an underwriter, how do you go, well, if I cut the price, I might win it off of the other underwriting company? How do you sort of gauge that and assess that? Because it's not in your interest to go and start undercutting everybody in the market, because then, you know, the market will collapse. You've got to be sensible about how you price things, but how do you win business?
So you try and win business, certainly new business. You try and win it by having superior sort of claims teams that are able to ensure that claims get paid very quickly, so the client isn't out of pocket. And you have superior sort of engineering expertise, and you'll have better actuaries than the opposition. It's all about having a better team, and being able to sort of offer something that your competitors can't. In terms of sort of winning business and pricing, ultimately, most of the time, yes, it does come down to price. So I might win a piece of business because I am $100,000 cheaper than somebody else who's also quoting that same business to either the same broker or a different broker. But yeah, ultimately, it's all about trying to get into a position where you're offering a superior service or a cheaper price, and you hope that the relationships you've got with the broker then allows the broker to recommend to their client that they want, or they should, go with me effectively.
Are you in as early as Sam, Phil?
Yeah, pretty much. Yeah. I'm normally between 7:30, 7:45 in the office. For me, the reason I'm doing that, a lot of the business I do is from the US, so it comes in overnight, and we strive to offer a good, quick service to our clients. So we try to get that business prepared to take us that morning. We want to try and be in the market. Sam says he gets there at 11 o'clock. I'd rather they got there at 10:30. Just give me a bit more time. So, and you want to get there. I mean, the ironic thing for us is you have to plan to waste probably half an hour in the morning, because you think, well, I probably want to get at 10:30, so I'm hopefully at the front of the queue, because I don't want to be stuck behind someone else who's got an hour's worth of broking. I want to get my broking done and get on to the next job. So yeah, I'm in the morning preparing stuff, then I'm up for a couple of hours before lunch, and then it varies really in the afternoon, depending on where the pressures are really. You might need to go back out. Alternatively, you're confirming everything that you did in the morning. You're speaking to your clients at that point. And then, I'm probably aim to leave the office between 5:30, 6 o'clock. So yeah, it's a fairly long day, but there's travelling on the either end of that, which is the downside for us. But if you're doing a job that can't really be done anywhere else, so. What
do you guys find are the positives you've got out of being in this industry and the opportunities it's provided you, whether that's travel or maybe salary or whatever? What are the positives that you take out of working in the insurance industry?
Again, yes, another really good question. Positives, I'd say it's number one is probably that it's rewarding. So what we do on a daily basis is helping clients with solutions to their problems or their concerns. So if they're basically insuring against an event happening that they don't want to happen, but it's up to the broker and the underwriter to kind of work together to find the best solution for their client. So it's rewarding from that point of view. There's very good travel opportunities. It's obviously, as we've said, very sociable industry and financially rewarding as well. I think in terms of opportunities, the insurance market and the insurance world is really your oyster. You can go as far as your ambition and ability will take you, to be honest. You can start as an administrative assistant and go all the way up to CEO. That's not unheard of.
I think that's a really good point about ambition in the insurance market. There are I didn't see any ceilings. So, you came in, you didn't go to university, Phil, and, Sam, you went to uni, but you studied history. There's no qualifications, there's no prior knowledge. It was just you guys got in, worked really hard, and you keep going to as far as you want to go.
Yeah, absolutely. We both say we sort of are in at 7:30 in the morning. I mean, the contract hours are your standard UK 9 to 5, or probably in Phil's case 9:30 to 5:30. But the world is your oyster if you're prepared to put the hours and the work in, and demonstrate to your bosses and to your clients and to the brokers that you're available as much as possible. Then you're likely, as long as you've got sort of a little bit of ability, you're likely to go further than those who don't do those things.
What would be some of the negatives you find in the industry, Phil?
I'm not sure that I find many, to be honest with you.
Well, commute probably, but
yeah. I mean, if ideally they could relocate to about 10 minutes away from my house, that would be perfect. Or pay me enough money that I can just live just round the corner from the office. One of the two.
I think we all want that luxury.
But like for me, very similar to what Sam said. I think there's so many positives about the market. I fell into it by mistake, but I'm so glad that I did. As we said, I made a lot of friends from the marketplace. I've got to travel to lots of places I probably wouldn't have before. I reckon I've been to Vegas about 20 times now, and I don't think I ever would have got away with that otherwise. So, and you can generally drag it out a few days. I think there's lots of positives. I mean, I'm sure there are some negatives, and maybe I've just been fortunate not to come across them yet. I can't think of any actually that spring to mind.
I think the only ones I can think of really are the fact that the industry, given that it's so old and steeped in tradition, that it can be quite stubborn and quite resistant to change. Yeah,
I've found that with a lot of different industries in London. They are nearly all stuck in their ways. They do like their old style of things and don't really want to move forward.
Yeah, so I mean, as I say, it's very traditional, and sort of modernisation and moving to sort of more technological solutions is proving a lot slower in the insurance industry than perhaps it would in other areas. But then, as Phil rightly points out, I truly believe that they're far more positives than those negatives. So
I know, sort of, I've joked about leaving and stuff. It wasn't because I hate the industry. There's parts of it I didn't enjoy, but it is a brilliant industry. It's fun, it's sociable. If you like sort of the buzz of making deals and chatting to people and being social, and you just got to be confident. I think a few times when I first started out broken, and you'd sit in front of an underwriter and, you know, you didn't know it exactly, especially if they're an experienced underwriter, and they sort of give you a look and you just get up and walk off. You're like, right, I'll come back later. Don't worry, I'll check what you want and get back to you. But what sort of the main reason I think I felt that I wanted to leave the industry is, but from my point of view, I couldn't see it lasting as it is, as in for the you know, for a 50-year career of someone my age would have. I didn't see it as being, the fun bits were almost becoming less and less of what I was doing. I was doing more over email, more over phone, and I think you do definitely lose something from not having that face-to-face. There was still there, but the way it's going is electronic placing and less time face-to-face. I don't know if you guys find that and if you think that is the future of it, but...
Yeah, I mean, I think the key thing here, you know, is insurance is always going to be required. You know, companies can't afford to operate. They can't afford to run those risks on their balance sheet. So insurance is always going to be an industry that's required. And I think you're exactly right. I think that it will change. You know, the recent lockdown period has shown that actually it can work outside of that. You know, outside of that face-to-face negotiation and that environment. However, I strongly believe that it only works based on previously built relationships. So yes, we're able to transact over email and via video call and that at the moment, but that's only because we know the underwriters through that face-to-face interaction we've had with them previously. So whilst I agree more and more of, I think the, you know, low level, low value insurance type placements will become more and more automated and done electronically. I still feel that for the larger risks, the more complex risks, there's always going to be that face-to-face element required. Just because, and you know, that's, I think as well why the broker is perhaps a longer term proposition than I perhaps thought it was originally, is that you're always going to need that level of expertise. Not everything can be captured and done online, I don't think.
Yeah, absolutely. I think from my perspective, yeah, absolutely, insurance is always going to be required. The only concern I would have for my particular job, being primarily involved in oil and gas, is how long are those hydrocarbons going to last?
That's a good point.
There's clearly a lot of clean energy solutions out there, and there's an even greater sort of not necessarily demand, but there's a greater increase in supply of those clean energy solutions out there now. So, yeah, the point for me is oil and gas still going to last?
Would it be hard for you to move to a different class, though? Because obviously you've still got those raw underwriter skills. You're just applying it to a different topic, I suppose.
Fantastic question. And absolutely, I think one of the great things about underwriting and broking is that you have quite a lot of transferable skills. And if you can underwrite an oil rig that's sitting in the Gulf of Mexico or in the North Sea, then why can you not insure a piece of art that's sitting in a museum, for example? It's sort of, as long as you've got those same skills and the analytical side of things, you're insuring a different object.
I guess from your side, Sam, being on the underwriting side, maybe a bit before your time, but actuaries are now a thing, aren't they? Where these guys are actually paid to come in and look at all the data across a wide spread of classes and even in the class and drill down into the numbers. Do you ever find now that they might be saying, I don't think you should do that, I don't think you should write that risk? Or is it more just they're there to offer advice, like the engineers? Yeah,
absolutely. Another good question. I'd say they are becoming definitely more and more prominent in the industry, and certainly for underwriters. They don't actually, at the moment, they don't dictate what we do on an account or on a policy. They are there in they're a support business function, effectively. They enable the underwriter to make good decisions, and we use actuaries a lot to help us price. So you've got fleets of oil rigs, for example. How do you know what number premium you should put on on that policy, and we'll use various rating models that the actuaries have built to assist us in making that decision.
I suppose it's then up to you when someone like Phil comes in and starts going, well, mate, I need this price, and he's 100 grand off, and you start going, and there must be some play in the model where, you give 5-10% off maybe, and then it's up to you to, that's underwriting, isn't it? That's the art of what you do.
Yeah, absolutely. Pricing models will tell you a number, but the client might not be able to afford that number, or the broker might have lots of reasons why that number should be lower than it is. And 95% of the conversations I have with brokers about risks is the negotiation over price, because that is fundamentally the key part. I mean, as Phil was talking about earlier, it's all about price and conditions. That's why at the moment those actuaries are clearly still a support function and not the sort of the be all and end all.
Let's talk cash money. So we're just going to give you some average figures, right? So an average sort of going in both for underwriting and broking would seem to be around 18,000 starting up to about 25 maybe as a starter. Graduates maybe on a little bit more than if you come out of school, but that doesn't tend to last long, a couple of years maybe. And then as you progress up, as you guys have mentioned, if you're a senior broker, you can be anything from 60 up to, over 100,000. And with underwriters, if you get more and more experience, you can get a percentage of books sometimes, and you can earn, multiples of 100,000s. But does those figures sort of sit right with you guys?
For me on the broken side, that's certainly right in the ballpark of where we would be looking. And you're right. There is no ceiling necessarily, and more and more as you progress up the ladder, effectively. Even on the broking side, there is often bonus incentives as well, and like most companies within the city these days, the benefits and that tend to be pretty good. The sort of everything you would expect from healthcare and pensions and so on. So that's certainly right.
That's a really good point, actually. The packages you get working in the industry are brilliant, actually, aren't they? I think they're probably some of the best you can get in the UK job wise.
Yeah. I mean, I think most companies, we say, we'll offer you healthcare, offer you pensions, help with your interest-free loans on season tickets. To get buying a season ticket into London is not cheap. So any help you can get with that is greatly received.
Yeah, absolutely. And from an underwriting perspective, you're pretty much bang on as well. I'd say sort of as your average school leaver coming into the industry is looking at sort of 18 to 20,000, and then if you've got a degree, perhaps 21 to 25,000 would be my sort of estimate. And then as you progress through, then absolutely you can. The sky is the limit. It tends to build, and your salary and bonus and package as a whole tends to build with the experience that you've got. So you won't sort of start off. It's a slow burner, I think, is effectively what I'm trying to say. It's a slow burner. It takes a while to sort of earn those numbers that you're talking at the top end. But it's one of those that if you're willing to put in the hours and put in the work, then the rewards are there for you if you desire them.
So if someone was to go away today and look up some insurance job descriptions out there, what would be something that you guys have to deal with that probably isn't written down on one of those?
I think the sort of job level where people are coming into an insurance broker, if they're looking to come into the city, I mean, really they're going to be looking at coming into an admin role. You might still get the odd trainee broker type role, but more and more it tends to be, broking houses tend to take in people on an admin basis, or like account assistant, and then give them the opportunity to work their way up. You're very unlikely to decide you're going to be a broker and come in and go straight out on day one. Generally, you want, and this is the way I work with my team. I want people to come in at the bottom and have a grounding and learn the business from the ground up. So they're ready to go and they're prepared when they're going out to the market. Now, what's that not going to tell them? It's not going to tell them that they're going to do a lot of scanning and they're going to and they're going to do quite a bit of data entry. However, that is also balanced with the opportunity to go out occasionally, and I think there will be. You have to expect it's going to be an office-based admin job for the first few years, but as we've said all along, the opportunities are there for much greater if you're willing to put the work in.
I think from a personal point of view as well, you're bang on. You get into an admin role or a support role. Me personally, I think that only lasted about 2 years, maybe. Once you earn the trust, then okay, run with it. It's quite good in that aspect.
Yeah. I think you're right. Once you've shown that you have the ability and the capabilities, then your manager is going to let you run with that, and they'll give you the rope to hang yourself effectively.
Yeah.
And that's where I think going back a little while, we say that the key is very important that the risks you're taking out, and you know what is expected of you, and if you can prove that you have the skills to do that, then you've got every opportunity to go and do what you want to do.
Yeah, and similarly on the underwriting side, I think the only thing I can think of that perhaps wouldn't be in the job description is luck.
You write your first risk day one as a claim, probably.
Quite. I mean, that's something that you definitely don't want. I mean, as an underwriter, you'd much rather have a lucky underwriter than a good underwriter in your team, I reckon, because ultimately it comes down to you want to bring more premium in than you're paying out in claims. So someone that's lucky that tends to avoid claims is going to pay out less and therefore earn more. So that's sort of one of the things that perhaps wouldn't be in a job description.
They can both be stressful jobs, but being a broker, personally, yes, it can be very stressful. But I must think, when you're an underwriter and you first, because they still sign it, so they have something called a scratch, and they still sign off on documents to say, yes, we agree to this. You must have been absolutely shitting yourself when you're writing your first oil risk.
I must admit, there might have been a slight tremor in my hand when I had that pen in it, signing that first risk that I'd insured. I mean, by the very nature of what I insure, oil rigs are high value assets. So, absolutely. If it goes wrong, you're going to cost your company quite a lot of money. So, absolutely. It's, I was rather nervous, shall we say.
We've already sort of covered this, but would you guys say you progress? So as an underwriter, how do you progress? And as a broker, how do you progress in the industry? We've already talked about, hard work, but what are some things you can focus on to really sort of climb the ladder?
I'd say rule number one is don't try and run before you can walk. I think that's essential. I think I've seen over the last few years more and more people sort of coming into the industry, and they want to take over the world. They want to earn the big salaries much quicker than perhaps is possible.
Guilty.
Absolutely. Don't try and run before you can walk. So, as Phil pointed out earlier, sort of he wants his team to really understand the risk, and before they sort of go out and start broking it, that's absolutely essential. There's no real shortcuts in the industry, because if something goes wrong or you don't know the answer, you're going to get found out very quickly. And one of the sort of more nerve-wracking things is sometimes claims do go to court, and you'll have to stand up in court and be prepared to explain your rationale and your decision-making process. And that's something that can only really be learnt and taught with experience. Don't try and run before you can walk. Hard work, dedication, diligence.
I think for me, it is more or less as we said earlier. I think the attention to detail, making sure you know what it is you're doing before you go and try and do it, and listen to and learn from your colleagues. I think for me, The first I don't know, few months, I suppose. I was going with my senior colleague, listening to their technique, listening to what they're saying, what they're doing, what sort of information do they know about this risk that I need to know, and you get a feel over time as well for what different underwriters want. One underwriter might want something. He's always going to ask what colour is the front door. Like, it's irrelevant to the risk, but he wants to know it every time. And you want to know that information, what that person wants. But yeah, I think there aren't really shortcuts. It comes down really to take your time to learn what it is you need to know. Take your time to learn about the product you're selling and what you're offering, and then you will get that natural progression. I think I don't think really when I joined I'd been being a broker, but the opportunities clearly were there, and you have to almost learn as you go along. What do I need to do to take that opportunity, and just make sure you're positioning yourself the best way you can.
So a favourite question we like to ask at the end of each podcast is, would you go back into it?
Would I go back into it if I had my time again? Absolutely, yeah. I think it's sociable, it's rewarding, financially rewarding as well. There's good travel opportunities. We tried to touch on some negatives, of which there are very few. And yeah, I'd do it all over again. Perhaps I'd try a different class of business, not because I dislike oil and gas. I never had the intention when I went into insurance to do oil and gas. It was just that was the position that I was offered at the time, and I sort of had to learn on the job very quickly, and using the experience of the engineers in the team that sort of know far more about it than I do, being specialists. So yeah, it's certainly something that I would do, but perhaps try a different class. There's so many different classes of business. I mean, specialty insurance is the possibilities are endless. I think you can insure anything from sort of David Beckham's left foot, for example, prior to him going to the World Cup. I remember that was a risk that was going around in the market, to terrorism insurance or kidnap and ransom insurance or horse racing. I mean, it's vast. The opportunities and the different classes of business you can go into is very, very varied, and there's probably something in there for everyone.
I have to agree. Given the choice again, I definitely wouldn't join the police again. I certainly would go into insurance, though. It's as we've said. It's very sociable. Made some great friends there. Financially, it can be rewarding, and I actually find it interesting. I'm sure there's parts of insurance that are boring, that people will find boring. I'm fortunate. I quite enjoy what I do, and I have to say, I don't wake up in the morning thinking, "Oh shit, I've got to go to work." I actually quite like it.
That's absolutely brilliant to hear, guys. Thank you so much for coming on.
No, brilliant. Thank you for having us.
It's been a pleasure.
Thanks, guys. Cheers.
Cheers.